which is essentially a very small portion compared to the stock and the bonds market. So, for instance, let's take one single stock of the FTSE 100. Let's take HSBC, which is one of the largest banks in the UK. And it's actually one of the GSIBs, the global systemic important banks. So a fairly important institution, but this is one single stock. And HSBC actually traded or the market value that was exchanged for HSBC in the fourth quarter of 2018 was actually 890 billion. So the graph here really tells the whole story of how illiquid this market is. Again, this is one single stock against the whole UK market. So the second issue that Blocksquare and other startups entering this space are trying to solve is the ability for investors to diversify. Diversification is obviously one of the backbones of portfolio theory. It's the idea that is used to essentially decrease portfolio volatility and to obtain a more efficient capital allocation. This is because by diversifying, investors can almost reduce to zero idiosyncratic risks, and then the overall portfolio volatility simply becomes a matter of correlation between the assets held. And again, the more you increase the number of assets, especially if you take different assets from different markets, the more likelihood that these assets are not going to be as highly correlated. So REITs currently do offer some form of diversification, but it's a very expensive one because REITs essentially charge 6 to 9% on average on performance, which is extremely high for this market and for the asset management market in general. And still, there's another fact that is kind of an issue, which is the fact that REITs still hold positions at the overall, say, building level or facility level. They don't really have ownership of single units. That means that the overall investment that they are required to do is higher. And even then, they do not essentially have the ability to provide investors with the ability for them to choose how to diversify. Commercial real estate can actually have the potential to be completely revolutionized by the tokenization. So if multiple tokens can be traded for a single unit of one apartment in a whole building, that means that the overall minimum investment can go down quite a bit, which means that investors can simply go in the market and invest in thousands of different units across the whole United States or across the whole globe. And this ability to diversify can actually be a real benefit from all investors, incumbents included. So these two were kind of the main things that Blocksquare was or is aiming to solve, the two big issues that it's aiming to solve. And then I provided kind of an outline of, okay, what would be the benefits if Blocksquare were to achieve these goals. So as we touch upon the ability to construct a portfolio at a low cost, so to diversify, and for the investor to choose how to diversify, not to having to relate to decisions of an investment manager. Also a more efficient capital allocation. The third point would be more data, by the fact that assets are digitalized. By default, there's going to be a whole lot more information available, including historical cash flows of how the tenants of an apartment building have paid the rent, or to what extent the full apartment building has been filled, what was the percentage of it being filled. and a whole lot more information. It also allows investor to have a more informed decision of how the market is performing. And then the fourth aspect that I also touched upon is the liquidity premium aspect. So as we were speaking about on the liquidity side, commercial real estate is currently extremely liquid. And so what I did here was a simple demonstration of what would be the impact of making this market more liquid. The reason being is liquid assets are traded at a discount. It's called by the NYU professor Tamar Duran. It's called the liquidity discount, and he estimated it to be around between 20 and 30%. So even if you take the lower estimate, so even if you take the 20%, and even if you take a lower estimate of the market size of around 29 trillion, which compares to the 50 trillion that I spoke about earlier, even in that situation, tokenization of assets could potentially unlock a lot of value. Say it would unlock 5% of that, the current discount that it's being priced in. Well, that could boost valuations by 1.45 trillion. So essentially, this is a very, very large benefit that everyone in the market would have, to the extent the market would become more liquid, to the extent it would be, the number or the value of asset exchange would increase in size. So obviously, not all of this will come free. Blocksware is a for-profit business. It will charge some fees. However, these are very small when compared to the traditional fees that a normal REIT charges. So investors, in their hand, can choose to go and create their own portfolios rather than investing with a REIT. And also, on the other side, REITs have to decide what to do, or whether to try to help these companies and kind of accept the fact of perhaps having to get a smaller portion of the revenues, or to try to ignore them and risk being disrupted. Perhaps the fact of helping them would potentially create an opportunity for them to create new products. And I'll touch upon this a bit later. Just overall, at a high level, Blocksquare will actually charge fees based on prop token generation, based on trades, and also based on validators, because obviously, being a Blocksquare system, it needs to provide incentives for validators to compute the massive amount of calculations that are required for the several blocks in the system to record transactions. So not everything is as smooth and as easy as probably I've presented it so far. There are substantial risks that both incumbents and retail investors would face in entering this space. There's cybersecurity risks that are related to the fact that everything is at the fingertip of the investor. Well, that also means that if that information gets hacked, investor could potentially lose ownership of that asset. Also, which is why in one of the 2 points I raised is that a very strong state-of-the-art cybersecurity system needs to be built around these Ethereum wallets to ensure proper safekeeping of assets. And perhaps some of the large custodians in the market will also have to get involved because large institutional investors need custodians to safeguard their assets. The second part, which is kind of what Greg Gibb touched upon in one of the videos in the 6th module, is about regulations and the fact that startups need to be ahead of the curve on regulations and need to react quickly. Well, regulation is going to be massively important for Block Square for its whole